1031 exchange investment in real estate, tax-deferred strategies. That is a huge mouthful and a way to say it is up to you whether you want to overpay in tax when you sell your real estate or do you want to use a 1031. So I'm going to talk about a few things today. What is a 1031, firstly? Number two, how do you use it to either trade out of a bad property, a bad landlord state, like the state of California, and not pay an exit tax? And then just how do you use a 1031? What's the timing of it? Do you use specialists? How do you make sure that you aren't overpaying in any of the taxes or any of the planning of that strategy? So first of all, let's talk about what a 1031 exchange is. A 1031 allows you to sell a property. This is the definition. That's why I'm reading it. Legal definition. It rolls the proceeds into like-kind properties without recognizing the gain. There's no capital gains tax due at the time of sale. In The Millionaire Maker, Gene and John Jones, if you read chapter 8, they did this exact strategies to 6 of their properties, 1031 forward. They rolled $700,000 in equity into 2 commercial properties from single-family properties in Kentucky. They went from a negative $7,000 in cash flow to having additional income. The math works, the structure works. And here's what the IRS is going to say about a 1031. It's in IRS code section 1031, an exchange of business, which is what a lot of people don't realize. You can 1031 a business and or an investment property and not pay tax. Now, the tax is not forgiven. It's just deferred on the cost basis to the next investment. So there are specialists that are phenomenal at this. There are some title companies who have specialists in their title company or an agency or a brokerage of real estate or a lender. But I wouldn't rely on them if they don't do this regularly. Ask when the last 1031 exchange was. If they haven't done one on a regular basis, like at least weekly, I would find somebody like a Sterling Trust, some other 1031 specialist who actually will walk you through the selection in 45 days of the property, and you have 180 days to close after that. The like kind is broader than most people think. Like the Joneses, they took 6 properties and they moved into 2 commercial properties. So like kind has a broader definition. Again, you don't want to be guessing at it. This lovely bathroom wall called the internet gives you a lot of variance and a lot of misinformation. So I would, again, use a specialist, make sure they know what they're doing. We have some coaches who can walk you right through that as long as you have, come in early enough and not just on a fire sale saying, oh, I have 3 days left in my 45 days. That would be challenging for anyone to do. So be mindful when you go into the property if this is something you're going to do. So you can either trade out of bad properties or trade out of bad states. There are states like California who has now put in an exit tax. So when you sell properties, you're going to have to be taxed as well as what you'd have to pay just on the sale. So when you leave California, do your best to do a 1031. Be mindful of the state that you're going into. And again, use a specialist. You have 45 days to identify the property and where you're going to go, and then 180 days to close it. So you want someone to help coordinate all that timing, the documentation, the paperwork. Inside the Cash Machine for Life, we do talk about exiting your big business. And a lot of people don't realize, they think 1031s are just for investment properties. It's also for your business. So when you move into another business, you either want to sell the assets of the business or you want to sell the whole entity and the business. Think of seller financing, think of other exchanges, but a 1031 from a business, if you just wanted to do a clean exit, you can take all the profits and you can move it to gas and oil or other equities. So other stocks, other bonds, other companies. You could buy a franchise. There's so many ways. Again, the broad term of like kind gets really wide when you have somebody who actually knows what they're doing and can give you more options than what you're finding on this lovely thing called the internet. Now, while you're here, I'd like you to subscribe to my channel, click that notification button. So 5 days a week, whatever device you're listening to, I'm in there for 5 to 10 minutes giving you some new financial information. In the show notes, I've given you the Millionaire Maker so you can read up to chapter 3, do a gap analysis. You can also grab this journal, the YouTube journal, which is what video did you listen to? When did you listen to it? What did you learn about it? What are you going to do about it? So this creates an action plan over 365 days for you. So make sure you grab those in the show notes. Now, the last thing I want to talk about 1031 exchanges is, again, the timing, the schedule. It's 45 days to find, 180 to close. You miss deadlines, it's over. Then you end up having to overpay tax. The other thing to know is the proceeds cannot touch your hands. So they have to go through the lender, through the 1031 specialist. So the proceeds are going to come into your own bank account. You're not going to deposit. It's actually going to move into the next project at a cost basis of what you would have been having to pay tax on. The risk you have in a 1031 is the failure to educate yourself, thinking you're going to do it by yourself and have the documents done by yourself. You're going to want, again, a specialist to walk you through this and your tax strategist side by side to make sure that there will be no taxation in these transactions. So if you have any questions, go to askloral.com, ASKLORAL, ask a question, make a request. We'll be back tomorrow with more.